So you're talking about some of these really big companies that are monopolies, and when we see monopoly, people say, oh, that's terrible, that's terrible. But you're saying, no, these companies are great, and people should consider investing in some of them. So what are some of the companies to which you're referring?
So FAMGA, right? Facebook, Amazon, Microsoft, Google, and Apple are really 5 of the biggest platform businesses. And these platform businesses, they don't own the means of production, they own the means of connection. And that means that they have network effects and a winner-take-all dynamic, which means that there's only 1 or 2 given winners in any given vertical, which is what really brings them that monopolistic type of nature.
Did you come up with FAMGA? Because this is the first time I heard it. I mean, it's basically FANG, right? It's Facebook, Apple, Amazon, Netflix, Google, but you don't have Netflix. You have Microsoft, so you called it FAMGA. So it still has the 2 A's, and Google and Facebook.
No Netflix, and Netflix would not be a platform.
Did you make up FAMGA?
I don't know, but if you want to give me credit, I'll take it.
It's the first time I've heard it.
But Netflix is spending $10 billion a year creating or licensing all of their own content. That inventory sits on their balance sheet. It's not asset light. It's not a platform as the way I'm describing it. And so they're going to have a lot more pain over the next handful of years and don't have as much of a defensive moat as these platform businesses.
So Netflix, not the one that you're looking at. You're looking at the other ones that we described. Some of the other names that I saw that you had listed in the companies of monopolies, you also had Baidu, Dropbox, Zillow, MasterCard. Those go into it as well, right?
Exactly. All of these businesses are basically the most dominant form of technology business in the modern day economy. So there are a lot of tech companies now in just about every vertical of the economy, but these are basically the most dominant version of tech company.
So tell us about the funds you have. I know one of which was the Platt Fund. What are the funds you have and how you're diversifying and breaking this up? Because one is mid cap and large cap. You have some of these monopolies. Well, how do you break it down?
Right. So WisdomTree launched this Platt ETF last week. They licensed this data from us, which says, here are the public companies that have platform revenue. There's about 70 companies globally, 60% in the US, 20% from China, with Baidu and Alibaba being a couple from China. And basically what we've seen is that these platform businesses exist in pretty much every vertical of the economy, but they have the most growth when markets are up, and they're more resilient when markets are down. So now markets are down, they go down less, and they bounce back much faster than the rest.
So you're not watching the headlines day to day. I saw the acronym BAT, Baidu, Alibaba, and Tencent, right? So those all would go in there?
They would. Tencent doesn't share enough information to have the right reciprocity, but they are a platform business, but they're not actually in the index because of that.
Okay, I understand. And so when the ones that you are choosing to invest in, it's almost irrelevant, not irrelevant, but you're not really watching the day-to-day headlines because you feel like they're somewhat recession-proof.
I mean, I don't look at any specific stock, right? What I look at is, say, if I look at the basket of this new form of business model, these platform businesses, and you look over the long term and you say, will platform businesses outperform the market, yes or no? I will give you an absolute, emphatic yes, that they will continue to not only outperform the market, but tech stocks in general as well.
So are you mostly, when I look, are you U.S.-centric for the most part? Is it tech stocks mostly?
Yeah, I would say all of these platform businesses are tech stocks. Over half of them are in the U.S. Over half of them weren't actually even public companies a handful of years ago. So they're all relatively young and have a huge amount of growth in front of them.
So when we're looking at the breakdown, communication services, consumer discretionary, I'm seeing the breakdown mostly in the United States, more than 63%. But is there a concern of some sort of government regulation, some sort of risk, oversight, where they're looking at these companies very closely about privacy or whatever, and then the whole group gets crushed?
It's a great question. The funny thing, the ironic thing is that privacy actually helps them. So if we look at Google and Facebook with GDPR, they created all these rules and penalties about how you advertise to people in Europe digitally. Post GDPR, Google and Facebook have a larger share of digital advertising because they have the most data and the best technology to comply with these laws. So the funny thing is that privacy and regulation legislation actually ends up helping them and eliminating a lot of the smaller competition.
Oh, that's interesting. What about the fact the markets, like when we look at the S&P 500 and the NASDAQ, they're breaking down below the 200-day moving average. The indices are all basically at 3-month lows. Is this when you jump in and buy more? Is that how you do it?
Absolutely. Basically, these businesses, when we look at their growth trajectory, if you look at the penetration of platforms in these overall markets, the business model just came out 20 years ago in the 90s with Microsoft, right?
Right.
A lot of these companies weren't even public 5 years ago. And so we're really in the second inning of a 50 to 70 year transformation of how businesses are structured in the 21st century economy. So when you look at it over a long-term perspective, we're still very, very early, and these businesses have a lot of runway in front of them.